Hey everybody, I'm Gokul from Restoration Brokers of America, and welcome to our Q4 report on mergers and acquisitions in the restoration business. Okay, here are four major themes that I want to talk to you in kind of teeing up this report, right? Theme number one, labor shortages. So in our Q3, when we polled a lot of our sellers, there was a lot of talk about, hey, I can't get enough people to do the jobs. And what we're finding in Q4 is those labor shortages are decreasing. So when we talk to owners and they're putting ads out for a technician or a PM or a GM, they're getting more and more applications and applicants that actually show up for interviews. So a lot of those labor constraints are easing around the restoration industry, and that's also helping revenues come up and performance of the businesses come up in Q4, all right? So we also think and anticipate and predict, I would say, that those labor shortages will continue to ease going into 2023, right? So second major theme, a flight to quality. This was pretty astonishing, right? So 32% of all the deals that went under contract in Q4 did not go to close, right? So again, it's more important than ever to really get your business ready before you take it on the market. So here are the four reasons why businesses do not close. Value expectations between the seller and what the market is offering at the moment. Two, economic uncertainty. All right, 17% of the deals didn't close because of economic uncertainty, and buyers and sellers got a little skittish. Okay, 15% of it did not pass due diligence. So again, you want to make sure that all your financials and everything is in order, because buyers are kind of digging into your numbers a lot more now than they did a couple of years ago, right? And the fourth major reason is financing, right? So a lot of times interest rates now are around 6-7%. So banks and underwriters are also looking at these numbers a lot closer. Underwriting standards have tightened up. So four major reasons as to why businesses do not close, and almost 32% of companies did not close from an offer all the way to get to the end zone, right? Third major theme, so let's talk about multiples, because you all want to hear about multiples, right? So multiples shrunk a little bit, but not as much as we thought, right? So here we go. Business value of 1.5 to 5 million, all right? Usually last year, early part of last year and the year before, they were averaging around a 3.5 multiple. That means for every dollar profit you showed, a buyer was willing to pay you $3.50. Real simple math, right? Right now, that multiple has gone down to about 3 multiples. So for every dollar profit that you show, buyers are willing to pay you $3. It's just simple math. The cost of capital, the cost that they're going to be paying as far as interest rates and borrowing money has increased. So the value of the business went down just a little bit. So if your business value between 5 and 10 million, right? Your people are paying you about $4.50 for every dollar profit that we can show. Now they're paying about $4, almost 4, it's 4.1, but almost $4. So multiple has shrunk just a little bit at that enterprise value also. Businesses worth 10 million to 20 million. Multiples have gone down slightly from about 6.5 to about 6. And then above 20 million, we're seeing no difference, right? So even though this is not, maybe valuations are coming off the peak, they're still well above industry averages, right? And they're well above trends. If you go back 10 years in restoration, or even 15 years, that we've been doing this, valuations, even though have come down a little bit, they're still well above historical values, right? So, and then the last theme is seller confidence. Seller confidence has gone down quite a lot in the marketplace when we polled some of our sellers. Last quarter, it was high, almost 85%. It's gone down to about 57%. What that really means is that most of the sellers in the market, when they look forward, they're not feeling that good about it going forward. But here's a real interesting thing. Even though the sentiment has gone down quite a lot, right? The offers and the multiples that we're getting is still historically above 10, 15-year average. So there's a huge disconnect between how we're feeling about the economy and what we are actually seeing in the economy, right? So there you go, folks. Four major themes. Labor shortages are easing. There's been a huge flight to quality. Multiples have gone down just a little bit, but they're still well above industry standards. And the fourth, seller confidence. Even though our confidence has gone down, the economy is still much better than what we think and feel that it is. Okay? Thanks.